Hi everybody, welcome to Purpose Driven Life. This is Serdar. I hope you guys are doing well. Today we'll be discussing if it's a good time to buy. Before we do that, I just would like to share this video with you. It's an interview with the chief economist with Redfin, Daryl Fairweather, and this interview was with Yahoo Finance News. And once we are actually done with the interview, we'll be talking about in detail and try to untangle the data that's available to us and see actually and decide whether or not are we looking at a good time to buy. And as we go through the video, I will certainly provide some tips and advice in terms of when it comes to home buying. A new survey found Americans haven't felt this optimistic about the housing market in 20 months. But still, high home prices may cause a little bit of you know, um, cause a little bit of a problem with the re-emerging confidence. Put all that aside and let's see what Daryl Fairweather has to say.
Housing market mortgage demand dropping over the holidays. This is according to the latest data out from Mortgage Bankers Association. Now that's even as mortgage rates continuing to fall through the month of December. We did see, though, rates level off just a bit because just last week, rates ticking just a bit higher. Now our next guest being a bit more optimistic about the real estate market this year, but encouraged about some of the buying activity that we could see. For more on that, we want to bring in Daryl Fairweather, chief economist with Redfin. Daryl, it's great to have you here. So let's talk about what we're expecting from the Fed, potential rate cuts this year, what exactly that then means for potential home buyers out there. How big of a driver do you see that being for the housing market in 2024?
The recent data from the economy shows that the economy is starting to normalize, which is why the Fed can pull back a bit. And this is great news for the housing market. The recent decline in rates has already encouraged more buyers to come back, and sellers are coming back too. So with more supply and more demand, it just looks like it's going to be a healthier year for the housing market.
So talk to us a little bit more about a healthier year. Than what more specifically should we be expecting?
There will be more buyers and more new listings. It's a little bit too early to say exactly how strong demand or supply will be, but I think we're going to see more sales this year than last year. And it's a bit uncertain if prices are going to go up or down. We're forecasting that they go down just a little bit, but that could change if demand comes back stronger than supply does.
So when we talk about affordability, obviously a massive issue here. We are seeing maybe some improvement when you take into account that mortgage rates, the 30-year mortgage rate off the highs that we saw not too long ago. How do you see that story playing out, given the fact that we would likely see a supply shortage if we do see any improvement on pricing?
The recent decline in rates is improving affordability already, but I think the window for which affordability is going to improve is going to be a short window, potentially only this year, because once buyers come back to the market, they're going to start competing, and that's going to drive up prices unless we see a substantial increase in supply to match that demand. And there's really no place for that increase in supply to come from because we're not seeing as much new construction as we did these past couple of years.
When it comes to that new construction, clearly a lot of potential home buyers, especially new home buyers, really not given another option, given the fact that existing homes simply are not on the market. How big of a player do you see that being in the housing market this year and the ability maybe to alleviate some of the pain that we're seeing for inventory levels?
I think new construction is going to play as big of a role this year as it did last year. We're going to see more existing homeowners decide that now is a good time to move. People who had been previously putting it off because they didn't want to trade their 3% interest rate for a 7% one, some of those people just can't wait any longer. And also the decline in rates is making that decision not so difficult. And new construction has already slowed down. So I think it's going to be more driven by existing stock of housing than new construction this year.
All right, Daryl Fairweather, great to have you here.
I hope you guys enjoy the interview with Chief Economist with Redfin, Daryl Fairweather. There was actually a lot of things that she talked about in this, 3 minutes of interview. And now we will be unpacking all this information and try to make it more relatable to our day-to-day life. Before actually we start talking about this good time to buy, let me make one thing very clear, guys. So we wake up every morning to one or another way, some good or bad news. It's either inflation going up, inflation going down, the job numbers, the interest rates, and there is a lot of noise. And sometimes it's hard to not to get overwhelmed with all that information coming to our way and trying to figure out, what's the best thing to do. Um, so the purpose of this channel is really to make sure that we are taking all this information in and then translating it into some kind of information that hopefully will be useful for you guys. And also, as we say in this channel, live by design and not by default. What we mean with that is that just worry about what you can control and don't worry about what you cannot control. And when it comes to what you can control, for instance, your credit score. There are actually certain things you can do to improve it. So when actually the time comes for you, either lending for a home or for other purposes, you have a good credit score that can support you and can give you actual numbers. Now, we also have another video that we talked about credit score and what you can do to influence those things. But nevertheless, let's actually talk about a survey which actually came out in December. So 31% of consumers said they expect rates to fall within the next 12 months, up from 22% the month prior and 16% in October. So as you can see, there's definitely a raise in the confidence. And on the other hand, while more people are feeling optimistic due to declining rates, here comes the topic of affordability as challenges remain a top concern going into 2024. As experts cited, limited inventory that could threaten to push home prices high. Now, most Americans, by the way, thinking, as you can see on this Fannie Mae data, still thinking that it is actually not a good time to purchase. Now, with mortgage rates below 7% and the Federal Reserve putting interest rate cuts in its forecast in 2024, it could actually be a good time, but is it really? Now, let's talk about that. Timing the housing market is more complicated than timing the stock market, but you are not buying the market, you are buying a house in a city neighborhood block where you want to live, hopefully for a quite while. Consider how 2024 might be the year you buy a house. Now, when it comes to understanding the housing market, there are actually a number of areas that we need to focus on. And let's start with the mortgage rates. Mortgage rates have fallen below their 52-year historical average since 1971. The 30-year mortgage rate has averaged 7.74% based on data collected. Now, of course, that's little comfort to home buyers today who remember when rates were under 3% for much of 2021. Conversely, the highest rate on record was a whooping, I don't know if you guys remember that, but it was 18.63%, and that was back to October of 1981. The other thing we need to understand is lack of existing homes. The rate gridlock is contributing to the lack of existing homes for sale. For more than 12 months, new listings have been down year over year. The number of new listings of homes for sale is down more than 20% from pre-pandemic levels, according to Realtor.com. Now, here's the time for to provide you some actionable items and some advice. For example, consider expanding your search to more affordable areas close to your favorite neighborhood if it is too pricey. There are actually strategies that you can implement to get into the housing market quicker than maybe you are planning to. And as I said at the beginning, as we go through this information, I will continue to provide you some tidbits and insight. Now, moving to the next area, home values are moderating. There's actually a little good news when actually you start talking about the home values are moderating. The increase in home prices is definitely when you look at the national median house values, it's definitely going down. And another advice for you guys is that look for homes with price reductions where you want to live, then negotiate even harder. Now, when it comes to negotiation and negotiating harder, you definitely need a good realtor on your side. So definitely have some professionals working with you to make sure that you are getting the best possible deals. Now, the other area that you can focus on is the construction of new homes. And it's actually showing promise of growth with a slight increase in inventory expected in 2024. However, builders are still wary of oversupplying the market, concerned that consumer demand would sag as potential buyers shy away from uncertain mortgage rates. Um, and another action point is that if you want to buy a house now, consider new construction. You may be able to choose some finishes or make an even better deal or a spec home that has been on the market for a while. Now, let's actually talk about when is a good time to buy a house. Buying a home is more than considering microeconomics factors. It's an important life decision based on your personal and financial situation. So let's look into the factors that may impact your decision when it comes to purchasing the home. Where do you want to be in 5 years? Basically, this is looking and considering your goals. When you rent, the decision to move is broken down into 6 months or a year or two at a time as your lease renews. But every dollar related, detail makes a home purchase a medium to long term investment. Buying a house includes various costs: down payment, closing costs, and financing fees, moving expenses, property taxes, and perhaps selling your existing home. Homeownership requires a years long timeline. How you make a living, your friends, family, and even community amenities all come into play. The second one is the income. A primary consideration is, of course, your job. Will it require a location change anytime soon, or can you live where you please? Is your income steady and all but assured? The third one is the credit score. One of the significant factors that will qualify you for a home loan is your credit score. It's important to know it before applying for a mortgage. So, just to give you some ideas, for the most common loan, conventional mortgage, not backed by government agency, you generally need a FICO score of 620 or better. FHA loans can allow a credit score as low as 580 with 3.5% down. VA loans issued to qualified military service members and veterans don't officially have a minimum credit score, though some lenders will require a FICO score of 620. As a benchmark to where you stand, the median credit score on a new mortgage is the second quarter of 2023 was 769. So of course, minimum scores are the entry level qualifying. The higher your score, the better the loan terms you will be offered. Again, as I said earlier, there's actually a video I released before talking about the strategies when it comes to boosting your credit score. I'll let that video at the end of this video. And if you didn't watch it, I will strongly recommend just go and take a look at it, and you may learn some tips and tricks. Now, the next area we'll go into is your current debt load. A primary financial metric lenders will use to determine your credit worthiness is your debt to income ratio. Fannie Mae, a government-sponsored entity that provides liquidity to the home loan market, looks for a maximum total DTI ratio of 36% of the borrower's stable monthly income. Exceptions can allow for total DTIs up to 50%, but it's usually best to avoid working on the edge of qualification if you can. The down payments. A large chunk of your savings account should be dedicated to the down payment. A minimum of 3% down is required in order to qualify for a conventional loan targeted to first-time home buyers, or ideally 20% to avoid private mortgage insurance. Yes, zero down options exist if you are eligible for a VA or USDA-backed loans. And according to the Realtor.com, the average down payment in the first quarter of 2023 was 13%. Now, buy smart and shop a lot, guys. Relentlessly shop mortgage rates and lenders for the best loan offers and justified fees. Get a written pre-approval from your lender, then shop for a house you can love and can afford. Your home buying competition according to Zillow, when it comes to the first-time buyers versus repeat buyers, first-time buyers are more likely to reach out to at least three lenders and three real estate agents. So again, guys, I hope you find this information when it comes to home buying useful. As I said, just watch the previous videos. There are some detailed explanations of like the credit score and other things that we discussed. Down payments, for instance. There's actually some strategies there I suggested before. What actually you can do and how you can work it out. So again, I hope you find this useful, and I'll see you next time. Thank you for listening.